If you wanted to buy the whole time stocks but thought that valuations were insane and stood patiently on the sidelines to jump in when there is blood on the street, you are perfectly right here. I'm Dan from the Investment ABC, and in this video I want to talk about possible areas where we might see a long-term bottom. If you follow my channel, you know that I have been bearish for stocks since January 2020 and was anticipating a crash. Now, the Dow lost 36% from its all-time high in just 1 month. This was the fastest sell-off in history. The two primary reasons for this crash are the sickness we have at the moment and the oil price war and crashing oil prices. The sickness spread all over the world now and forces governments to shut down their economies totally. This will drive up unemployment in a straight line, similar to how the stock market came crashing down in a straight line. On the other hand, Saudi Arabia and Russia unleashed an oil price war which hit crude oil to a low of $20 a barrel. This increase in production is coming at a time when demand for oil is collapsing. Low energy prices might lead to bankruptcies for many oil companies, which will put pressure on the corporate bond market and banks. Meanwhile, governments unleashed trillions of dollars injections into the system, which did not help at all because the money is not getting into circulation. Our whole economic system is built on confidence, and right now confidence is collapsing like a house of cards. Many countries have problems to maintain their supply chains and to fill up their grocery stores. In some countries, grocery stores are rationing their stock. That means every person can only buy one pack of toilet paper or pack of water, for example. In many ways, the confidence of the average Joe was shaken. At the same time, average Joe is about to lose his job because many smaller and also bigger companies are starting to lay off their people at this exclusive moment. The situation for the global economy is really bad, no doubt about that. But as investors, we should never be a perma-bear or a perma-bull. As an investor, we have to analyze the situation and ask ourselves how much bad news is already priced into the market. In my opinion, we have seen a lot of panic selling more than in 2001 and during the GFC so far. The selling pressure was constantly there without any sort of real counter-rally. The reason for this immense selling pressure is that this crisis is a health crisis straight out of the movies. It is not just an economical crisis. On top of that, governments around the whole globe are shutting down the economies, so no one is getting any income to buy stocks right now. On the contrary, many especially smaller investors like millennials are selling their 5 Tesla stocks which they bought at almost $1,000 in panic to be able to pay rent and other expenses. The drastic actions of governments against the sickness will lead many smaller companies and also normal people into bankruptcy if the lockdown is taking too long. At the moment, the average person is selling and not buying, but who are the buyers right now? The buyers are again the 1% who have already enough money and diversification, those who are not falling in panic about the thought of rent and expenses. The 1% have enough cash to wait on the sidelines and watch the stock markets crash enough to back up the truck. So the question now is at which levels big money is entering again, how dangerous the sickness really is, and when the lockdown is gone again. If we have a look at the chart of the Dow Jones Industrial Average, we can see that we could find support around the 18,400 points region, or if we fall further, somewhere between 14,000 to 16,000 or worst case 7,000. In my opinion, the smart money is buying in the 19,000 to 20,000 range already slowly, while most of the retail investors are selling. If we compare the S&P 500 dividend yields with the 10-year Treasury yield, we can see that the S&P 500 yields 2.48%, while the 10-year Treasury yields 0.963%. There are many great companies which are yielding 4 to 8% right now, though the dividend yield could be cut due to the recession we have. But when you think about the Fed and other central banks going into negative rates soon, many big investors might jump back in quickly when the crisis eases again. There is no real place to go for the big money except the stock market. The central banks and governments are taking some unseen actions to not let anyone go bankrupt. They are giving money to small and big companies, and they also give money directly to households to spend during this crisis. All this money injection isn't landing in the economy because the economy is on hold. But if the economy is opened up again, say in the next 2 to 3 weeks, we could see some coiled up demand returning and the bottom somewhere in the 18,000 range in the Dow. But on the other hand, if the economy is halted for 2 to 3 months, we will see the Dow fall further, either somewhere in the 14,000 to 16,000 range or even worse. I said in my last video that I'm a buyer at these levels and that I will continue buying gradually solid companies for the long term. When the Dow hit prices under 19k, I was buying more aggressively and also opened a long-term call option. Something about this sickness is smelling fishy, and I have the feeling health-wise it might not be such a big deal as the media wants us to believe. To me, it looks like the Fed just needed a reason to inject trillions into the economy because maybe some large entity was on the verge of going bust or they were about to lose control over interest rates. Whatever it is, they needed an excuse to inject massive amounts of money into the system. If they are successful in stabilizing the market with their actions, or better said, if they don't want to pull the plug now on the current system, there is a big chance that we might see a minor recession and get out of it rather quickly. They will tell people after a 2 weeks lockdown that everything is fine and the virus is gone, nothing to see here. They will keep going with the current system until the value of the currencies are inflated away by the current Fed actions in a few years. They have a good reason to switch to the sickness-free digital global currency. The probability of this scenario is 50% in my opinion. If I'm wrong and the sickness is really dangerous and millions of people die and the lockdown takes months to end, you need to have enough funds to deploy slowly into the market when prices are much lower. No one except those in power know what is going on, so you better be prepared for all scenarios. Also be assured that after the deflationary period, the prices of everything will most likely skyrocket until the average Joe is really squashed. Average Joe couldn't see property prices and stock prices rise anymore, so they FOMO'd in at the top of the market. Most people I know took on huge $1 million mortgages to buy properties because they believe it will always go up. When I asked them, you have to pay your mortgage for the next 30 years or more. What if you get unemployed or sick? What are you going to do? Many asked me why I would be so negative and that property would always go up in value and that they would just sell the property when they have to sell it. Now we have the sickness and the halt of the global economy, and many of those people wish that they would have never bought that property in the first place. Some even put their property for sale, but they don't get the prices of a couple of months ago. Chances are high that a lot of people who are totally over indebted will have to sell their assets at the same time at the bottom, while the smart and rich investors are just waiting to get bargains. The worst sentence to say is, this time is different. This game of inflating and deflating asset prices has always been played, so you better learn it and get good at it. If you like this video, please support this channel and hit the like button. Share and subscribe. Please guys, let me also know your opinion where the bottom for the Dow will be, and if possible with a small explanation. Thanks and see you in the next one. Bye.